Thank you, Hirlock. And I'd like to thank Deputy McGuinness and indeed the members of the committee for the invitation to discuss the report on banking 2022 published 10 months ago. I appreciate that it's a wide-ranging report, and I do want to address all of the points, but I also wish to address specifically the issues that Deputy McGuinness has raised in his comments, so I will try to do both in my time. I would just say the first 10 recommendations of the report deal with the withdrawal from Ulster Bank and KBC from the Irish market, so please do let me address that because it's a substantial part of the report. Obviously, the withdrawal came as something of a surprise and changes the landscape of retail banking very significantly. The retail bank population has dropped from 5 to 3 banks, leaving only domestic banks, each of which at the time the state had a shareholding. And there are very considerable concerns about the impact that would have on the mortgage market, personal and business finance, and deposit investment and cash services. And it's fair to say the state has had to react to that. In terms of the, I just want to say about the big unknown was essentially in relation to current accounts, but over all things. In all, over 1 million deposit and current accounts needed to move, and that's of enormous practical significance to anybody who has to do it, to find a new account and to go through the practicalities of switching direct debits and so on to be able to do that. And that happens in an environment of traditionally very low levels of switching, ordinarily only around 4% of accounts every year. It created an enormous practical challenge, and everybody had to play their part in relation to it, the central bank overseeing withdrawals from a supervisory standpoint, but there are a lot of other stakeholders involved. I'd like to thank obviously the committee themselves who worked directly with departing and remaining banks in this process. Of course, the mass migration was an opportunity for some new players such as Revolut and for established players to play a more integral role in the market. I would like to say as Minister for Credit Unions that I was very pleased at the role that the credit union sector had to play as part of that switching process. To date, 84 credit unions have received approval from the Central Bank to provide current accounts, and more than 75,000 credit union members now have current accounts. The mass migration of consumer and business accounts is now nearly complete, with over 99% of active accounts now closed and 1.3 million new accounts set up in the remaining retail banks. I think it's fair to say it was a stressful time for many, many people, and it took a lot of inconvenience to switch all the payments such as direct debits and recurring card payments. And to be honest, contacting banks for assistance wasn't always easy in that process. Despite the effort put in by customer-facing teams, it really was a difficult process in my view, in my constituents' view, and I think there are very significant lessons to be learned from that experience, and I think the Central Bank will reflect on it carefully. I think it is important to reflect on competition in the market and the role and the retail banking review and what we have to reflect on in that way. In that way, I'd just again like to mention the role of credit unions, because I do think that in the overall considering about the new banking environment, the retail banking review, it's obviously clear that we do need greater competition, that we do need a community bank that's focused in a not-for-profit way on serving the interest of its members. I do want to highlight how credit unions have stepped up to support their members and in an additional way grown not just the current account offering but indeed their mortgage lending. At the end of June 2023, the total credit union mortgage book stood at €418 million, up 39% over the last year and up 69% over the last 2 years, and deputies up and down this country will know the role that credit unions play in their community, and I am so keen to try to expand that. The Irish League of Credit Unions has seen the combined mortgage book grow by 50%, with over 1,100 new mortgages issued so far this year, and commercial lending to our small and medium enterprises is now up to €161 million. I highlight it because they're not traditional areas where the credit unions have operated, and it does go to show how they've adapted to try to serve the needs of their communities. The deputies will be aware that legislation has passed committee stage in this House to enable credit unions to form an even bigger part of retail banking in Ireland, and I thank you for your support in relation to that. A practical example of that is, for example, of the sort of collaboration that will deliver better for customers right across Ireland, for members across Ireland, is the Mortgage Credit Union Service Organisation, the CUSO, which is going to, I think, significantly expand the role of credit unions in Ireland. And I just want to say that as a sort of a rebalancing effort, considering the difficulties that you highlight in your report. from the changing banking landscape. I think we can agree that it has changed very considerably, that the way, in a number of different ways, the way many people interact with their banks has changed. It does offer, I think, opportunities for customers, such as ease of access and increased access to a different range of products and services. Customers have a lot of different options, different providers for different products, but I think it's also fair to say, and deputies will know this, that some of the changes have had a negative, very negative impact on some customers. The closing of branches, the reduction of cash services or other in-branch services can affect consumers, especially those in smaller towns and rural areas, especially those in my own area. Elderly people who are accustomed to a particular type of access in their banks. Many of those issues have been raised by deputies before in the Dáil, and I would like to reflect on how the government is taking action to address some of those concerns. The Retail Banking Review recommended that banks should submit robust board-approved assessments to the Central Bank where they're planning to significantly alter their services or close their branches. That should examine the impact on customers, the suitability of alternative service provision and the plans for migrating customers to them. The minimum notice period was recommended to increase from 1 to 4 months for significant banking changes. And in April of this year, the Central Bank wrote those Dear CEO letters to the remaining retail banks. Banks should aim to adhere to the new notice periods, and that will also be part of the Central Bank review of the Consumer Protection Code. Just to highlight where some of the offering by credit unions where they've stepped up. Ballyconnell is a Cavan credit union which decided to offer current accounts after becoming the only financial institution left in town. Their current account provision has been a game changer in the local community, and while that's a success, really what I'm highlighting is how very many towns in Ireland have suffered as a consequence of the withdrawal of retail banks, and how there are large tracts of Ireland who don't have a retail bank offering, and how we have to support the credit union movement to fill that gap. For example, in Ballyconnell, they had a modest expectation of about 300 accounts a year, but it's worked out much better than anticipated, with 750 current accounts opening since the launch in March, including 500 new members. So it should be the case that no matter where you live in the country, you should be able to access all of the financial services that you require, whether in person in a reasonable way, and credit unions offer that, or indeed online, and you should be able to access cash. Of course, the deputies are aware, and it's referenced in the report, about the Retail Banking Review's recommendation in relation to access to cash, and the Department of Finance is preparing legislation. Heads of a bill will be available before the end of this year, and it will require ATM operators to be authorised, to be supervised by the Central Bank. We look forward to engaging with the Oireachtas on the proposed bill early in the new year, because it's quite obvious, and deputies have raised it a number of different times, how important it is to be able to access cash. Again, I could give you a credit union example of how wonderful they have done that in Roscommon in particular, but I do want to address the points raised by Deputy McGuinness in my comments also. I note that the Deputy has raised a number of individual cases in relation to whistleblower, and I respect him doing so in this forum, and I recognise that. He will appreciate that I, as Minister, cannot comment on individual cases, but I am aware that the Central Bank has met individuals and that they have a strong focus on the role of whistleblowers. Of course, it should not be the case that somebody is prejudiced because they have engaged in whistleblowing, but I won't comment on individuals if I may be careful. I would reflect that the role of the committee, of the Oireachtas Committee, is an extremely important one, that we should be able to go through all of the different issues facing customers with financial services. But I would probably offer a note of caution, as a former member of the Public Accounts Committee myself, being very careful about the role of Oireachtas committees and their scope and how that's managed. And I think that the way in which the committee has provided this report is an excellent example of being able to highlight these different issues. But I do understand the frustration that deputies may have in their representation of constituents who are dealing with some of the non-bank lenders or some of the newer lenders. I am a constituency TD. I understand exactly the sort of dynamic that deputies occasionally raise, and I would suggest, and I've spoken to the department about a way in which we can facilitate the hearing of those voices in a concrete way within the department and with other stakeholders, so that every dialogue in relation to this is balanced and understands the particular pressure and frustration that our constituents can face from time to time. So I do just want to answer those particular points for the Deputy before sitting down. If I may just address some of the other points in relation to the report in particular, I think on specifically I note that the report has particular concerns, and now this was 10 months ago, but I'm sure the concerns persist in relation to interest rates, which have increased in the period since the publication of the report. They do look at this moment to have settled or paused, we hope more than temporarily, but just on reflection. But it is an extremely important piece, a challenge from a cost of living and inflationary perspective. Monetary policy, of course, is set and implemented by the ECB. The setting of retail interest rates in the economy is a commercial matter for individual firms, and of course neither the Minister for Finance nor myself have any function in setting interest rates. But I do think it's helpful just to set out some of the rates. As of June 2023, banks' average weighted mortgage interest rates increased from 2.58% in June 2022 to 3.42%. Banks have seen increases in all interest rate types of mortgage lending. New non-bank non-lenders have seen the largest increase, moving from an average interest rate of 2.47% in June 2022 to 4.73% in June 2023. Now that, I am told, is driven primarily by a larger tracker book. Non-bank lenders have seen the smallest increase year on year, mainly due to a reduction in new lending for 2023, having predominantly fixed product mortgages in their portfolio. You are aware that the government is very acutely aware of the difficulties that increased interest rates are causing for some mortgage borrowers. That we are revising the bank levy to try to provide a more proportionate contribution to our public finances to be able to provide support, including mortgage interest relief in a targeted way. But I think it's important to say what we need to do to support the sorts of borrowers that the Deputy is correctly highlighting and who are in particular difficulty and whom we have all met as constituency TDs. Firstly, the central bank regulatory framework is focused on protecting customers. It does compel all regulated firms to high standards of transparency and fairness in their dealings with borrowers. And the central bank has met the CEOs of banks and other mortgage entities at the end of August to reiterate his concerns about the impact of rising interest rates on borrowers. He clearly set out the expectation that all firms should support their customers at this time. The industry responded to the Minister on the 6th of September, and they did announce additional measures to support customers who may be experiencing difficulties. Now, the industry have launched Dealing with Debt campaign. Government supports are available through the Insolvency Service and through MABs, which are important resources to help with personal debt difficulties, and struggling borrowers should continue to engage with different organisations. But I do appreciate the imbalance that there is in the nature of that engagement and how difficult and how stressful that can be for a borrower to be in that situation. And the process can be extremely difficult and stressful. And I do really want to acknowledge that, having been, having tried to support people with such representations in the past. I would tell the House, though, that another new initiative arising from that meeting with the Minister is that MABS is now collaborating with all of the mortgage servicing firms. They have developed and expanded a streamlined customer engagement framework, which I hope will work, and they meet regularly to discuss individual cases. I think that's a pretty necessary improvement to the engagement between these firms and borrowers facing difficulty. The final initiative that the industry agreed is a new set of common eligibility criteria, which would make it easier for customers of credit servicing firms to switch mortgages, as the Deputy has highlighted. The particular difficulty with that, now that, they say, would give important clarity to borrowers who would like to switch mortgages from non-banks back to the retail banks. I have spoken to the credit unions, the representative organisations, who are keen to be engaged in this also. But as the Deputy has said, it can be extremely difficult. I know my colleague Deputy Brendan Griffin has highlighted a number of individual cases in the last number of days. I think deputies from every part of this House could highlight just difficulties, whatever about the resolution, but the nature of engagement. And it really is important that that balance is flatter between borrower and lender, and that engagement is supported and rewarded. Let me just see what else I can cover in the time for you, Deputy, on the different recommendations. I think it's really important today of all days to highlight the impact of digitalisation and fraud. Fraud is on the rise. Fraudsters are taking advantage of the shift to digital banking. Everybody else, one of us, I think, has received emails and text messages purporting to be banks or delivery companies, or in my case, the e-flow 50 Yoki. There is a real risk, particularly now, I see this perhaps anecdotally, but coming up to what's known as Black Friday, the risk of small transactions being sent to people on their phones and to have to click in the link for $3.99 or something else. There is an increased, or there appears to be increased fraudulent activity this weekend as the shopping frenzy of Black Friday goes on. But also I think we need to be aware and highlight to people across Ireland the risks coming up to Christmas of increased fraudulent activity as they buy perhaps more online, and it is difficult perhaps to keep track of what delivery may happen or what delivery may not happen. So I think we should be especially vigilant to fraud at this time of year. And as well, consumers can feel themselves under pressure to either borrow or to engage in buy now, pay later. And we should seriously consider the types of credit suitable for their situation and help them understand what they may be getting into.
Thank you, Minister.
Thank you. Thank you, Catherine. I'd like to just address the position that what Deputy Conway Walsh has said in relation to the banks and to the government strategy to divest from banks. The government doesn't have a view that it should remain an owner of the bank. The government has always had the view that it should move back to private ownership as part of the broader economic strategy of showing that the state doesn't engage and doesn't get involved in the decision making, or doesn't get involved in an overreaching sort of way in a general sense in private companies. Now, I know that Sinn Féin has indicated in legislation that it would do this in respect of insurance companies. And I wonder if Sinn Féin would take that view when they go travelling across the US telling people that nothing will be different and that companies should expect the exact same thing that they say that they have put on legislation. I'm sorry, I've debated it in the House, Deputy Conway Walsh. And so the point, excuse me, I'm speaking. That Sinn Féin would in fact interfere in the decision-making of corporates as evidenced by your legislation on insurance. Sinn Féin would also maintain a stake in the banks on the off chance that share prices would rise, because of course it's easy to come in here and say this is what happened and that's what happened, but share prices are volatile. And had the government taken a different decision and share prices had gone down, you would have said, hey, Minister, you should have taken that opportunity in 2018 to sell off some of those shares. So it is so easy. I appreciate it's easy to sit there and to criticise one way or the other. Now, the state, as you know, has had a long-time strategy to divest precisely for that broader reason of not being involved and to have a hands-off approach from the management. But we have had actually very good success in reducing the shareholding and make sure that we have tried to recover as much for the taxpayer as possible. You will be aware that on the Bank of Ireland piece that there was that actually we took in 2 billion more in the management of that. To date, 23 billion out of a total of 29 billion, which was originally invested, has been recovered. Our current investments are currently valued at approximately 5 billion, leaving a gap of just 1.3 billion. And between the dividends that we have received and the management of that and the timing of further divestment, I believe that based on that trajectory and based on that management over time, that we will recover that money. So, please, Deputy, when you're sitting there, and it is easy, as I said, to criticise from the side, do two things. One, reflect on the success that we have had in terms of the management of the divestment. Two, I hope that you will confirm that a Sinn Féin Minister for Finance would not get involved in the management of different companies like you suggested in relation to insurance. So I just think now, Deputy, I'm happy to stand and criticise the banks where appropriate, but the government took a stake in the banks, which was not a decision that any government would like to take at that time, but has managed its way out in a very careful way that I believe, has recovered money for the taxpayer in an appropriate way and will continue to recover money in an appropriate way. I do want to thank deputies for the engagement today. I do want to thank deputies for the report. I think it's extremely important. I do wish to reassure colleagues that Department of Finance colleagues will continue to work alongside the Retail Banking Centre, but crucially colleagues in the Central Bank and other government departments to make sure that we are delivering a retail banking system that can support customers, SMEs and the economy and provide retail banking products and services efficiently and competitively for consumers. The 2020 2022 banking review recommendations that I highlighted in my opening contribution are targeted to achieve just that and deliver the best outcome for our citizens and economy. But I think overwhelmingly, more than anything, I do think that this question of fairness that Deputy McGuinness has raised, and the question of balance in terms of representation for borrowers who are engaging and who are in difficulties and who are looking for structured ways out of the difficulties that they are in, who are looking to engage and find solutions, that they must be respected and must be supported. And certainly from the government side, we are trying to do everything we can in relation to that. And I hope that we will see further progress from Minister McGrath's engagement over the next period. I think this is an important period in the banking landscape. We are a small economy. We need banking. We need access to competitive banking services for the people of Ireland. I do think, and thank you for acknowledging it, Deputy Conway Walsh, that the credit union has a greatly expanded role to play, but I'm not sure that it will be enough. I think it's important to acknowledge that we see the beginning of further movement into the mortgage market. And forgive me that I don't have the name to hand at this moment. Yeah, thank you. Sorry, was that an accident?
It was an accident.
Oh, sorry.
You still have 5 minutes. My apologies.
Well, I'm sorry, I can't find the piece that I was going to say, so perhaps I'd best sit down. Thank you.
Thank you, Minister. Apologies for that. I'm sure you've